Wealth inequality is just worse than it has ever been in U.S. history, with the top 1% of wealthy Americans owning 30% of all the wealth in the U.S. and the bottom 50% owning 3%. It's bad. It's bad out there. And I think we're all feeling it with gas prices, grocery prices, inflation being an actual thing. We're all feeling it right now. So I really wanted to help you understand the issues around taxing the wealthy more fairly. Welcome to the Sunlight Tax Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, design nerd, tax pro, author of Taxes for Humans, and the founder of Sunlight Tax. If you're a creative, wellness, or mission-driven entrepreneur who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello, beautiful. So happy to be with you today. So last week on the podcast, I told you about a studio fundraiser and grassroots campaign that I am trying to get off the ground. I wanted to hand make something. I wanted to just kind of get out of my own way and head a little bit. And the summer is when I focus on art. So printing tote bags that relate to a grassroots campaign is rather practical when it comes to making art, but it's just what I've been feeling called to do because wealth inequality is just worse than it has ever been in U.S. history, with the top 1% of wealthy Americans owning 30% of all the wealth in the U.S. and the bottom 50% owning 3%. It's bad. It's bad out there. And I think we're all feeling it with gas prices, grocery prices, inflation being an actual thing. We're all feeling it right now. So I really wanted to help you understand the issues around taxing the wealthy more fairly, right? This has really affected my business this year. That's why it is top of mind right now for me, because it affected me. And I can just see that it's on people's mind. People are wanting, very rightfully, to feel like, yes, they're paying into a system that feels fair, and it's fair for everyone, including, 100 millionaires and billionaires. And the problem with understanding the issues about taxing the wealthy is that there's a knee-jerk reaction, which is a wealth tax. But in fact, there are real problems with a wealth tax, mostly that it's probably illegal and will almost definitely be struck down by the Supreme Court. But there are ways to tax the wealthy more fairly. And, these laws have actually been in place in the U.S. already. The U.S. has historically been very on board taxing the robber barons, Standard Oil, the Carnegies and Mellons, right? We've done this in the past. In World War II, we called it conscripting the capital, right? As young men were being sent and conscripted off to war, we said, well, let's conscript the capital. And the millionaires agreed that, yes, their capital should be conscripted towards the war effort as well if they were going to get the luxury of staying home. So these are things we've done before. There's hope. It's not only not impossible, we've actually had this stuff in place. And we could put it back in place and we could adjust it for the modern era. But you have to get up to speed with some of the issues to understand that a wealth tax will probably be a waste of energy, and yet bringing inheritances into the income tax system would be a very reasonable way to get, to stop an aristocracy from building, to stop this country from being a place that is just ruled by rich kids, right? So I've started a campaign called Tax the Rich. I printed tote bags because, I'm an artist and you can get one. And those serve as a studio fundraiser for me. So I lost my studio, as you probably know, in 2024 in Hurricane Helene. And I didn't take $1 for myself at that time because I felt like my company was doing well and I didn't want to take anything away from people who really genuinely needed it. So I raised a lot of money for others and gave it all away. gave away a substantial chunk of my own money. I didn't raise any money for myself. And now the economy has shifted. People are feeling really angry about their taxes. My business is not actually, hasn't made enough this year to actually rebuild my studio. So I am in a place where I don't exactly want to ask for money, but I do want to offer a tote bag and a campaign and some education. And if you feel called to get a tote bag to spread the word, just know that it helps me rebuild. And I'm very grateful. So what I want to talk to you today is basically direct you to this campaign, help you understand that one, yes, it's a studio fundraiser for me, the artist, but it is also a campaign, a grassroots campaign. I am trying to help. I want this to spread. So if you can share last week's episode, share the website, sunlighttax.com/taxtherich. It is a website that I built to give you the facts, about how the wealthy currently avoid paying taxes that they honestly should already be paying, and how we could make the system fairer by bringing a lot of untaxed money that the wealthy have into the income tax system where taxation does actually happen. And let's not forget our civil servant friends at the IRS, whose job it is to collect the tax dollars of the wealthy. And of course, yes, you and I, and we have all been turned against the IRS by wealthy tax cheats who don't want a strong IRS to collect their tax dollars. And so funding the IRS, I know it kind of probably strikes a chord in your heart where you're like, wait, I don't want that. But you do want that. I'm telling you, there is $700 billion that went unpaid last year by wealthy people who know that they owe it, have agreed they owe it, and just said, nah, I'm not going to pay. Come and get me. And they know they've turned the U.S. population against the IRS. And so we support not funding the IRS to the degree where they could actually get the money that those wealthy tax cheats know that they owe. So that's a simple path to $700 billion instantly. So I want to make sure we defend the IRS and understand that the IRS is the tax collector and we want the taxes collected. But the other things I want to bring you today are just a couple key misdirects that happen a lot. I think, there's a lot of lobbying that wealthy families in the U.S. do to turn us against laws that would tax them, right? This is the playbook. And so I just want to be here as a tax educator to help you understand how this stuff goes down. Turning us against the IRS is one of the pieces of that playbook. And I want to give you two more today that came from my husband and my mother, right? People who are within my daily orbit and love me and support this cause very deeply. And yet they also, both of them in their head was the sort of right-wing talking points rather than the tax truth. So let me bring you some tax truth today. And what I also want to do is make a small request. So if I'm starting to spark your interest, right? You're hearing about wealth taxes, you're hearing about the New York pied-à-terre tax, the California wealth tax, and you're kind of wondering like, what's good, what's not good, what's workable, what could we do better? I want to let you know that Ray Madoff, the author of The Second Estate, has agreed to come on to the Sunlight Tax podcast to talk about how to tax the wealthy in a fair way. And I want to ask you before she comes on, this book is fabulous. By the way, please buy the book. I based a lot of the tax facts on my Tax the Rich website on her book, which is unbelievably good. Do you have questions for Professor Madoff? Do you have questions? She is a tax policy expert. I am not. So if you have questions, please send them to me because I would love to line up some listener questions when she comes on to the Sunlight Tax podcast. All right. So send your questions. You can email them to me, hello@sunlighttax.com. And you can also send them on Instagram @sunlighttax. Just send me a DM with your tax question, and I will collect those for Professor Madoff to answer on the Sunlight Tax podcast. All right. So two of the misdirects that I heard just from this week from talking to my mother and my own partner about this, let me just give you some facts right away on that. It makes me realize how big a lift educating the American public including my family, is on tax fairness. Okay, so I was talking to my mother literally this morning, right before I hit record, telling her about this project. And I was saying, did you know there's not even an inheritance tax in the US? Inheritances are not taxed at all. And she said, well, aren't they taxed after somebody gets, $14,000, $15,000? And that is a mistake that a lot of people make. That is what people think. It's not true. So what she's referring to is a rule. When you give a gift to someone, right? When you gift your money to them, if you give them over that year's threshold, and this threshold amount increases each year. So it's about $15,000 this year, but it's double that if you're a married couple and you give the money, right? Because each individual has that threshold. Now, the person receiving the money, let's say my parents gave me $15,000. They could actually give me $30,000 before anyone would have to do anything. That money would not be taxable to me at all. It would also not be taxable to my parents. If they gave me over the threshold, there still would be no tax, okay? But they would have to file a gift tax return. So paperwork, yes. Payment, no. Okay. Now that gift tax return, the purpose of it is to, you have a lifetime limit around $15 million that you are allowed as an individual to gift to someone without any taxation whatsoever. Most people can give a couple homes to their kids and stay under that limit, right? So when you give over the annual gift tax amount, you simply have to file paperwork to kind of take a credit against your lifetime limit. That's it. That's it. There is still no tax on it. There is still no inheritance tax at all in this country, at all. Okay. By the way, the tax that does hit if you give someone over $15 million, that's a threshold that increases every year. So not precisely accurate for this year. If you give them over, that is called the estate tax. And the estate pays that, yes, but not the heir. Okay. So that's fact number one. Fact number two, I was talking to my husband again about inheritances, right? And he was saying, well, if you pay tax when you inherit, wouldn't you have to sell the property potentially and lose the family home, lose the family farm when you inherit money just to pay the taxes? Another misdirect. In fact, in 1990, when the 18 wealthiest families in the U.S. hired a lobbyist and started a concerted effort to turn the American public against the estate tax, their lobbyist said, first of all, don't call it an estate tax. Estates sound like wealth, right? Call it a death tax because everybody dies. And this will make people worry that it affects them, when in fact the estate tax does not affect almost anybody, frankly. In 2023, only 4,000 families in the U.S. has even paid any estate tax whatsoever. And in 2024, which I believe is the last year we have data for, only 1/4% of all estates paid $1 of estate tax. So think about how tiny that is. It's nothing. Okay. So at that time in 1990, they were looking for scenarios that would pull at the heartstrings of the U.S. taxpayer to turn them against the idea of taxing hyper-wealthy people so that their heirs did not create an American aristocracy, which is the reason we have an estate tax, right? We live in a democracy. We don't want to be old Europe with old wealthy families ruling every institution. We want merit. That's what our country was founded upon. Imperfectly, not as inclusively as it could be, but that was the ideal. Okay, so these wealthy families, this lobbyist, they found a farmer who was worried about the estate tax. I forget his name. It is a story told in Professor Madoff's book, The Second Estate. Absolutely fabulous. They found this one farmer A very folksy, very relatable human, perfect spokesperson. They did not tell this farmer that there was no chance on God's green earth that he would ever pay $1 of estate tax. He was way under the threshold where it would ever apply to him, and that any good tax legislation would always create a threshold like that so that no family farm was ever affected. But he was worried about it, and they let him believe that. And he went out and became a spokesperson against the estate tax, talking about his fear that he would lose his family farm when he died because his heirs would have to sell the farm to pay the taxes. Well, any good legislation, including the legislation that existed at that time, has thresholds in it, so that doesn't happen. That's why we have tax policy experts writing tax law and not kindergartners, not people who don't know anything about taxation, right? This is the point, right? Sometimes an expert is there for a reason. So even this farmer wasn't affected by it, and they let him just look like a jerk talking about it. And to this day, people like my own partner believe that this is a problem with the estate tax. It has never affected a single farm in America. Even these 18 wealthy families trying to turn the U.S. population against the estate tax could not find someone who was a farmer who was actually affected by the estate tax. So they found a farmer who was not affected by it and let him look like a fool talking all around the country about an issue that would actually never touch him and never did. Okay, so I will also just give you an example that is a little less way up in the clouds. I'm going to give you a tax example that you yourself, as a taxpayer, may have actually experienced in your life, right? The capital gains exclusion on your primary residence. This is a great example of writing into the tax code a way for you to not have to sell your primary residence, your family home, in order to pay taxes. Okay. So if you've ever sold a home, right? If you've ever owned your home and sold it, you will know that in the US, in US tax law, there is a thing called the capital gains exclusion on a primary residence. So in other words, if this is your primary residence, this is your principal home, right? And that is a pretty low bar. You only have to have lived there for 2 out of the last 5 years, not even a majority of years. When you sell your primary residence, you get an exclusion from the capital gains taxes. So if that house has appreciated in value and there are capital gains, you don't pay any capital gains tax on the first $250,000 of gain from the sale of that property. And if you are married and you sell that joint property, then both of you get to apply the exclusion, and so it doubles. So you have a $500,000 exclusion, capital gains exclusion, when you sell your primary residence. So if you make over $500,000 when you sell your house, on whatever gain you have over $500K, yes, you'll pay capital gains tax on that. So potentially, if you made, let's say you made $600,000 of gain in the sale of your home, $500,000 is not subject to tax. 100 would be. That rate is probably 20% given your tax rates. You know, that's the highest capital gains tax rate. But you might be in a 15 or even a 0% level. So saying it's the largest tax it could be, that would be a $20,000 tax on that $100,000 of gain of your actual $600,000 of gain. Yes, it's complex, but what it does is it prevents people selling their home from owing so much tax that they would have to, be unable to get the next home, for example. In other words, we write tax law to account for these things. We're not dummies, okay? So these are 2 misdirects experienced by my very own family, my mother, my partner, people who are pretty in my orbit, who had misunderstandings about the tax code. So I'm realizing this project is probably really big and beyond me. So if you're listening to this and you like the idea of the wealthy paying their fair share, if you hear the fact that in 2018, Jeff Bezos paid a 0.98%, so less than 1% tax rate for the year, and in that year, I paid about 40% tax rate. If that makes you feel upset, like it makes me feel upset, if that feels unfair to you, then send me your questions. Send me your questions like, but I thought it worked like this. Can you explain why this is this way? Send me your questions about taxing the wealthy. I will ask Professor Madoff. If I can't get her to answer the question, I will do my best to research it on my own and bring you those answers right here on the Sunlight Tax Podcast. And if you are interested in showing off this project and sending people to the website to learn about taxing the wealthy in a way that will work, sunlighttax.com/taxtherich. And yes, you can buy a tote bag hand printed by yours truly that supports me rebuilding my studio that I lost entirely in Hurricane Helene so that I can make art again. So thanks for spreading the word. Thanks for helping this campaign lift off the ground. Please share that website with all your friends. Share this episode or last week's episode with your friends. Grassroots campaign has to spread in order to catch fire, but I think right now before the midterm elections is a great time. It's in the air. Let's spread the facts. All right, I'll talk to you next week. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review, and share it with a friend. It really helps. I'm so grateful. My tax guide, Taxes for Humans, is available wherever you buy books and at sunlighttax.com/book. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.